Welcome to the deep dive. Today, we're really getting into the weeds on a company that's, well, it's basically building our technological future, Taiwan Semiconductor Manufacturing Company, TSMC. We're going to be digging into their Q2 2025 earnings call, the press releases, and also a pretty detailed analysis report. Our goal here is simple. Cut through all the noise, get you the key takeaways from these sources fast. Think of it as, your quick guide to understanding TSMC's latest performance and what it means for, well, everything tech. Get ready for some pretty surprising stuff, maybe a few aha moments along the way.
Okay, so let's start with the buzz. The market reaction to these Q2 earnings. It was pretty dramatic, right? The stock opened on July 17th and bam, up
Yeah, well,
4.36%.
electric is a good word for it. That pushed it straight to a new all-time high around, what was it, $240-some.82.
Nearly $248.
Yeah, so not just a little nudge up.
No, not at all. This was a clear, immediate thumbs up from investors. A real vote of confidence.
So what was behind that confidence? The actual numbers must have been pretty stellar.
Oh, they were more than stellar. They really knocked it out of the park. Consolidated revenue hit NT $933.79 billion.
Okay, and in U.S. dollars.
That's $30.07 billion.
Yeah.
And here's the kicker. That's up 44.4% year over year in U.S. dollars. Just massive growth.
Wow. 44%. And the profit?
Even better, actually. Net income soared 60.7% year over year. That brought diluted EPS to NT $15.36. That's $2.47 per ADR unit. And, that really blew past the Zacks consensus estimate of $2.37.
So beating expectations significantly. What about margins? Sometimes high revenue comes at a cost.
Right. Gross margin was 58.6%. Operating margin, 49.6%. Net profit margin, 42.7%. Very strong. Now, the gross margin did dip just slightly, 0.2 percentage points from the last quarter.
Okay. Why was that?
Mostly unfavorable foreign exchange rates
Right.
and, the initial cost, the margin dilution from ramping up those new overseas fabs. But that was partly offset by running their factories fuller, higher capacity utilization, and cost improvements. So still incredibly profitable overall.
Right. And you mentioned drivers. This wasn't just broad market growth, was it? There was something specific fueling this.
Exactly. The company was very explicit. They pointed directly to continued robust AI and HPC-related demand.
AI and high-performance computing. It really feels like that's the story everywhere right now.
It absolutely is for TSMC. It just highlights how fundamental they are to, well, everything happening in advanced tech.
And looking at their technology mix, does that back it up?
It does. Shipments of their 3-nanometer tech, that was 24% of wafer revenue. 5-nanometer was 36%, and 7-nanometer was 14%.
Okay, so add those up.
You get 74%. Advanced technologies, defined as 7-nanometer and better, accounted for nearly 3/4 of their total wafer revenue.
74%. That's incredible.
It really shows where the demand is concentrated. It's all about the leading edge. And connecting that to the bigger picture, you see TSMC just perfectly positioned, capitalizing on this huge long-term shift in tech demand.
Driven by specific applications.
Primarily HPC, high-performance computing. That platform alone brought in 60% of their Q2 revenue. It jumped 14% just from Q1.
60% from HPC.
Yeah. Smartphone revenue grew too, 7% quarter over quarter, making up 27%. But HPC is clearly the powerhouse.
And management's commentary reinforced this AI focus.
Very strongly. They said AI-related revenue is set to double again in 2025. That's after it tripled in 2024.
Doubling after tripling. That's explosive growth.
It is. And they're projecting a 40% compound annual growth rate for AI revenue over the next 5 years.
40% CIR.
So this is just about TSMC doing well. It's a vital sign for the entire tech supply chain, especially for AI infrastructure and cutting-edge computing. It tells you where things are headed.
Okay, so Q2 was fantastic. AI is booming. Let's look ahead. What's the guidance for Q3? Still looking strong.
Yeah, the guidance is optimistic. They're forecasting Q3 revenue between $31.8 billion and $33.0 billion US.
Which is another increase.
Right. At the midpoint, that's about an 8% sequential increase, or 38% jump year over year. So continued strong growth.
But you mentioned some headwinds earlier, especially around margins. Does that show up in the Q3 forecast?
It does. They project gross margin for Q3 to be between 55.5% and 57.5%. Operating margin between 45.5% and 47.5%.
So a bit lower than Q2.
A bit lower, yes. And those headwinds are still playing a role. Foreign exchange is a big one. The NT dollar has appreciated quite a bit.
How much does that impact them?
Well, they said every 1% appreciation of the NT dollar against the US dollar cuts their NT revenue by 1%. and knocks about 40 basis points off their gross margin.
Ouch. Okay, so that's significant.
It is. And then there's the ongoing ramp-up of the overseas fabs we talked about, those initially dilute margins.
Right. The startup costs and lower initial efficiency, how much impact do they expect from that long term?
They quantified it. They expect that dilution to be around 2 to 3% annually in the early years, maybe widening to 3 to 4% later on over the next 5 years, starting from 2025.
Okay, so facing these FX and fab ramp pressures, how do they maintain profitability? Are they worried about their long-term margin target?
That's the key question, isn't it? But they seem remarkably confident. They reiterated that a long-term gross margin of 53% and higher is, in their words, well achievable.
And how do they plan to achieve that despite the dilution?
By sticking to their fundamentals, focusing on what they do best. Technology leadership, which gives them pricing power, keeping fabs full, so high capacity utilization, constantly driving down costs, and managing the mix of technologies they produce.
Makes sense. And are they pulling back on spending because of these margin pressures?
Not at all. They're maintaining their 2025 capital budget. It's huge, between $38 billion and $42 billion US dollars.
38 to 42 billion.
Exactly. And roughly 70% of that, the vast majority, is going directly into advanced process technologies.
So they're doubling down on the leading edge.
Precisely. It's a massive long-term investment. It hits margins short-term, yes, but it's designed to cement their lead and ensure they dominate the market for years to come.
And it seems to be giving them confidence in the full-year outlook.
It does. They actually raised their full-year 2025 revenue growth forecast. They previously targeted 20% growth in U.S. dollar terms. Now they expect it to be around 30%.
A significant jump in expectations for the year.
A very notable revision upwards.
Yeah.
They're clearly seeing sustained, strong demand, especially for AI.
And a lot of that investment is going into expanding their physical footprint globally, not just in Taiwan.
That's right. This global expansion is a huge strategic shift. It's based on customer needs, wanting more geographic supply chain options, and also requires significant government support, of course.
Let's talk about Arizona. The scale there sounds immense.
It's unprecedented, really. They've announced plans to invest a total of $65 billion there.
$65 billion just in Arizona.
Yes. That covers 6 advanced wafer fabs, 2 advanced packaging fabs, plus a major R&D center. It's like building a whole semiconductor city.
And how's the progress there? Is it just plans or things happening?
Oh, things are definitely happening. Fab 1 is already in high-volume production, started Q4 2024, using their N4 process. And importantly, they said the yields are already comparable to Taiwan.
That's impressive for a brand new site.
Very impressive. Construction on Fab 2, which will be 3 nanometer, is finished, and they're trying to speed up getting into volume production. And Fab 3, that's for 2 nanometer, and the future A16 node has already started construction. They plan to accelerate that too, because AI demand is just so strong.
So once this is all built out, what fraction of their most advanced capacity will be in the U.S.?
They estimate around 30% of their 2 nanometer and more advanced capacity will eventually be in Arizona.
30%. That really creates a significant, independent, leading-edge cluster outside of Taiwan.
Exactly, that's the goal. Diversification, resilience, meeting customer and government demands for regional production.
And Arizona's is just one piece, right? What about other regions?
Correct. It's truly global. In Japan, their first fab in Kumamoto, focused on specialty tech, started volume production late last year, also with good yields. Construction on a second Japanese fab starts later this year.
In Europe?
Europe too. Dresden, Germany. Plans for a specialty tech fab there are moving ahead smoothly.
And back home in Taiwan, are they still investing heavily there?
Absolutely. With government support, they're planning 11 new wafer manufacturing and packaging facilities in Taiwan over the next few years. That includes multiple phases for 2 nanometer fabs in both Hsinchu and Kaohsiung science parks. So, massive investment continues in Taiwan alongside the global expansion.
It's hard to even comprehend that scale. Now, beyond the physical locations, let's talk technology roadmap. N2, A16, what's the latest there?
The roadmap is relentless. N2 and A16 are really pushing the boundaries of energy-efficient computing. That's the key focus, performance per watt. They actually expect more new customer designs or tape-outs for 2 nanometer in its first 2 years than they saw for both 3 nanometer and 5 nanometer.
Really? Why more?
Fueled by both smartphone and HPC customers jumping on board simultaneously, and the performance gains, especially power efficiency.
Okay, so when does N2 actually arrive?
It's on track for volume production in the second half of 2025. It offers roughly a 10–15% speed boost or a 20–30% power saving compared to their current N3 node, plus over 15% higher density.
That power saving is huge for data centers and mobile.
Crucial. They also announced NTP, an enhanced version, for the second half of 2026, and then comes A16. This one's really interesting. It features what they call Super Power Rail, or SPR.
Super power rail. What's that?
It's an innovative way to deliver power to the transistors from the backside of the wafer. It significantly improves power delivery efficiency and performance.
Backside power delivery. That's a big architectural change.
It is, and it allows A16 to offer further improvements over N2P. It's also on track for the second half of 2026 and seems particularly aimed at complex HPC chips where power efficiency is paramount.
And beyond A16, are they already looking further ahead?
They are. Their A14 technology in the node after A16 is already in development and slated for volume production in 2028. It represents another full node shrink from N2. The pace just doesn't let up.
Incredible. Okay, let's shift gears slightly. The earnings call Q&A often has some real gems. What interesting nuggets came out of that session?
Yeah, the Q&A was very revealing. First, demand for CoWoS, that's their advanced packaging tech, essential for putting high bandwidth memory next to processors for AI.
Right, crucial for AI accelerators.
Exactly. Demand is getting stronger and stronger. They basically said they're playing catch-up, trying to narrow the gap between the huge demand and their supply capacity. So very healthy momentum there.
What about AI on devices like phones or PCs, edge AI?
Development is definitely happening. They said the increase in the number of units needing edge AI right now is still mild. But the silicon area, the die size for those chips, is growing by about 5 to 10%.
So more complex AI chips, even if not vastly more units yet?
Precisely. And they expect an explosion in edge AI probably within, say, 6 months to a year. So they see that coming very soon.
Interesting. And did they comment on the near-term outlook, like Q4? You mentioned their Q3 guidance implies a potential dip in Q4.
They addressed that. They said the implied Q4 sequential decline is mainly due to them being conservative. They're factoring in potential uncertainties like tariffs or other macro issues. But they also stressed, they're a company that aims high and achieves those targets if the opportunities are there. So maybe conservative guidance.
Got it. What about the N2 ramp we discussed? How does it compare to N3?
Profile-wise, the ramp shape is similar. But the key difference is revenue contribution. N2's revenue in 2026 is expected to be bigger than N3's was in its first big year.
What bigger?
2 reasons. Higher pricing for the newer node, and importantly, both HPC and smartphone customers are expected to ramp N2 strongly at the same time, unlike N3, which was initially more smartphone-led.
And capacity for the current advanced nodes, N3 and N5. Still tight.
Very tight, they said, for the coming years. And N3 is apparently even tighter than N5 right now.
How do they manage that tightness?
This is where their gigafab cluster strategy comes in. They emphasize their ability to adjust or convert capacity between nodes relatively easily. Apparently, there's about 85% to 90% tool commonality across N7, N5, N3, and N2.
So they can shift production lines around more easily than others might?
That's the idea. They mentioned currently using some N7 capacity to help support N5 demand and converting some N5 capacity over to N3 to help ease that bottleneck. Flexibility is key.
Did they talk about using AI themselves in their own operations?
They did. They're actively leveraging AI in their manufacturing and R&D, and they shared a really interesting statistic. For a company their size, even a 1% productivity gain from using AI translates to about $1 billion in value.
$1 billion from a 1% gain. That really underscores the scale and the potential efficiency gain.
Absolutely. It shows how critical optimizing their complex operations is.
And he talked about future, maybe more speculative drivers, like humanoid robots.
They were asked about that. They acknowledge it's probably too early for humanoid robots to be a major driver this year or next. They pointed out the complexity robots need tons of sensors, computing, and have to interact safely with humans. It's a huge challenge.
But longer term?
Longer term, they see it as a potential big plus. They even speculated it could eventually be a market 10 times larger than the electric vehicle market.
10 times EVs. Wow. That's a bold prediction.
Very bold, but it highlights the kind of transformative technologies they see needing advanced semiconductors down the line.
Okay, one last area. What about their older mature nodes? Is there overcapacity there, like some other foundries are seeing?
Their strategy seems different. They focus on developing specialty technologies on those mature nodes, things like radio frequency chips, image sensors, high voltage components, and crucially, they do this at the request of their customers. The implication is that for these specific niche areas, their mature capacity is tailored to demand and isn't facing general oversupply issues.
So specialized rather than commoditized mature nodes.
Exactly. And interestingly, the intense AI demand we keep talking about, it's actually pushing some AI applications onto their most advanced nodes, like A16, even faster than expected.
Why A16 specifically for AI?
Power efficiency. That backside power rail, the SPR in A16, offers something like a 20% power improvement. For massive AI data centers consuming megawatts of power, that 20% saving is absolutely critical.
It all comes back to performance per watt.
It really does,
Yeah.
especially for AI.
So let's try and wrap this all up. What does this deep dive into TSMC's Q2 really tell us? It clearly paints a picture of a company that's, well, much more than just a chip maker. They are truly central, pivotal to the whole global tech landscape. You have this incredibly strong financial performance just fueled by seemingly endless demand for AI and HPC chips. Combine that with this hugely ambitious global expansion, plus their relentless push on next-gen tech. It really looks like a company set up for continued growth, maybe even dominance.
I agree. They seem incredibly well positioned. But it also raises a fascinating question as we look forward, one for you, the listener, to really think about. As TSMC executes this strategy, diversifying its most advanced manufacturing across Arizona, potentially Japan, Europe, alongside Taiwan, moving away from, let's say, geographic concentration risk, how might that fundamental shift impact the long-term global balance of power in semiconductors? What does it mean for technological sovereignty, for supply chain resilience, and ultimately for the pace of innovation over the next decade or two? It's a massive geopolitical and technological shift happening right before our eyes.